In the world of gold hunting, people often assume that success lies in the most expensive equipment, the latest metal detectors, high-powered sluice boxes, or massive dredging machines. But the truth is far more fascinating, and for those who pay attention, far more rewarding. Smart prospectors know that nature itself provides the most powerful, reliable, and cost-free tools for uncovering gold. These tools existed long before human hands designed gadgets, and they continue to guide those who understand their language. What separates ordinary seekers from extraordinary finders is not always money or technology. It is the ability to see, feel, and read nature's own gold map. By the end of this journey, you'll realize that gold has always left clues, and nature has always provided the instruments to find them. Those who learn to use them not only save time and resources, but also step into a tradition as old as humanity's very first encounter with the glittering metal. Think about it. Long before prospectors could afford detectors or pans, gold was still being found, treasured, and shaped into ornaments that adorned kings and queens. Ancient seekers had no manuals, no modern gear, and yet they succeeded. How? They learned to read rivers, to study stones, to understand the way soil shifted, and to recognize subtle hints left by the land. Nature was both the teacher and the tool. Those who listened grew rich, while those who ignored its voice walked past fortunes buried just beneath their feet. Gold is stubborn by nature. Unlike lighter materials, it resists being washed away by simple currents. It clings, it hides, and it settles in patterns that can be predicted if you know where to look. The river bends, the gravel bars, the sudden changes in soil color, the mosses clinging to rocks. These are not just random details. They are signals, guiding markers that, when pieced together, form a golden trail. Smart prospectors trust these signals because they cost nothing, yet yield more than the most expensive detector in careless hands. Let's begin with water, the oldest and most relentless gold hunter. Rivers carve through landscapes tirelessly, grinding rock to sand and carrying fragments of precious minerals downstream. While many see nothing but muddy water, a trained eye recognizes the natural sorting system happening below the surface. Gold, being heavy, sinks and finds refuge where the current slows. Behind large boulders, inside crevices, beneath gravel bars, or in the inner curves of bends. It is there that nuggets often rest, waiting for those who know the river's language. For millennia, water has been both the thief and the deliverer of gold. It carries it away from veins and mountains, then lays it gently down where its weight defeats the pull of the current. Imagine walking along a riverbank and seeing dark streaks of sand where the water has sorted minerals. To the casual passerby, it is nothing but dirt. But to a prospector, those streaks are nature's gold pan. Black sand, composed of heavy minerals like magnetite, is a natural signpost pointing toward gold. The closer you get to concentrated patches of this sand, the higher the chances that fine flakes of gold, or even small nuggets, are nearby. No detector required, no costly sluice box, just the ability to see what others ignore. And then there is moss. Few realize that moss-covered rocks along streams are some of nature's most efficient gold traps. As water rushes over them, tiny gold particles lodge themselves in the fibers, building up over years, even decades. Prospectors who know this trick often pull back layers of moss and reveal glittering dust hidden in its roots. Moss becomes more than just a plant. It is a natural miner, silently collecting what others walk past. But the river is not the only teacher. The earth itself offers guidance if you learn to read its signs. Consider the color of soil. Subtle changes in hue often tell stories about what lies beneath. Rusty red soils may signal the presence of iron, and where iron thrives, gold veins are often nearby. Pale clays may suggest erosion zones where gold once settled before being washed further downstream. Even the type of rock scattered across the land speaks volumes. Quartz veins, jagged and milky, are among the most famous companions of gold. Spotting quartz outcrops in the wilderness is like finding a signpost that says, "Look closer, the treasure is near." Smart prospectors do not waste their days scanning blindly with machines. They scout first, using nature's signs to narrow down the most promising spots. Machines then become tools of confirmation, not blind hope. This is why experience trumps equipment. A beginner with the best gear will struggle if they cannot interpret the whispers of the land. But a seasoned prospector, armed with nothing but eyes and instincts, can walk into the wilderness and return with pockets glittering. Gold investing begins with gold finding. Investors who truly understand this know that the most valuable knowledge is not just in markets or prices, but in recognizing how and why gold gathers in certain places. By studying nature's role as a miner, investors gain insight into long-term patterns, understanding where future deposits may emerge, and why some regions hold more promise than others. It is why, in history, entire gold rushes erupted not from machines, but from one sharp-eyed prospector who trusted natural clues. And this is where the suspense deepens, because gold is not everywhere. It is selective, rare, and hidden. For every prospector who strikes it rich, there are hundreds who return empty-handed, not because the land is barren, but because they failed to see what was right in front of them. The muddy bends, the trapped moss, the color shifts, the stubborn heaviness of black sand. These are not just background details. They are the very keys to fortune. Ignore them, and you may walk past wealth that could have changed your life forever. The smartest prospectors are not just hunters. They are listeners, observers, and interpreters. They invest time in studying the language of streams, the patterns of erosion, the secret habits of gold. They understand that patience with nature yields far more than rushing with machines. Their reward is not just gold in hand, but the confidence of knowing they can return again and again, reading the land like a map that others can't see. This knowledge, dear viewer, is power. It is the kind of power that once sparked mass migrations, that turned barren lands into booming towns, and that still drives modern explorers to the wild edges of rivers and mountains. And yet, it is also the most overlooked, because while many chase shortcuts, only a few realize that the land itself is the greatest teacher, and that its tools are free, ancient, and waiting. Wind plays its role as well, not in carrying gold, too heavy for that, but in clearing lighter debris. Over years, gusts strip away sand and dust, exposing quartz veins, iron-stained rocks, or even revealing flakes lying exposed on the surface. To an untrained eye, this is just the bare skeleton of Earth, but to the seasoned seeker, it is a whispered invitation to dig deeper. This is why smart prospectors say that nature is not just a guide, but a partner. It does half the work, breaking down rock, washing away impurities, concentrating the heavy metal. The prospector simply needs to follow the clues and finish what the earth has started. Expensive machines may speed the process, but the truest skill lies in observation. And here lies the lesson that connects prospecting with investment. A wise investor, like a wise prospector, does not rush blindly into every trend. They look for the signs, historical flows, natural shifts, and enduring strengths. Gold itself has been humanity's timeless safe haven for thousands of years, and that is no coincidence. It is scarce, unyielding, and deeply tied to the earth. That is why smart prospectors don't just dig it out of rivers. They also invest in its future, knowing that gold's story is not fading, but strengthening with every economic storm. So, is it worth it to learn nature's gold tools? Absolutely. They are timeless, free, and astonishingly reliable. From moss to gravel bars, from quartz to soil color, from gravity to time itself. These are the instruments that have guided humanity's search for wealth for ages. Machines may come and go, but nature never lies. And as we close this journey, remember this. Fortune does not always come to the loudest, fastest, or most equipped. It comes to the observer, the patient one who knows where to look and why. Smart prospectors invest in nature's gold tools because they are the only tools that never fail, never run out of batteries, and never cost more than attention. This is the spirit we carry here at EGS Pro, where every story, every guide, and every exploration reveals the hidden bond between nature and treasure. If you found value in this journey, stay with us, because we are just scratching the surface of what nature has yet to reveal. The world beneath your feet is alive with secrets, and together, we will keep unlocking them one golden clue at a time. Until then, stay curious, stay patient, and above all, trust the land. Because gold is never gone, it is only waiting. They don't exactly tell you this in the bank lobby. They don't print it on your monthly statement. But behind closed doors, deep in boardrooms, there are people who watch you when you lust after raw gold, and not always in admiration. Because raw gold threatens something far more fundamental than your bank account. It threatens their power, their profits, and the entire structure of the modern financial system, where today we peel back the curtain. We expose why banks are quietly discouraging raw gold ownership, and why buying raw gold is not just a personal purchase, it's a political act. By the end of this story, you'll see raw gold not only as a hedge, but as a challenge to the status quo, with banks urgently trying to steer you away. You feel it in the gold price, don't you? It surges when inflation whispers at your door. It rallies when global uncertainty climbs. Central banks scoop it up in tons, often when other markets tremble. In 2024, for example, demand for gold as an investment asset reached a record $90.6 billion, according to the World Gold Council. And that number has only climbed in first quarter 2025. Physical gold demand surging, central banks increasing holdings, investors turning towards safe havens. If gold is such a coveted asset, then why does your bank act like it's a liability? Why do many financial advisors warn you about raw gold while pushing products with fees, complex instruments, or intangible assets instead? Because raw gold strips away the middlemen. It bypasses many of the profit centers banks rely on: fees for storage, premiums on paper gold, high spreads, complicated financial products. When you hold raw gold, the power shifts more toward you and less toward them. Consider this. ETFs and financial derivatives offer gold exposure without the hassles of physical ownership. Banks love those. You never see raw bars cluttering their vaults unless they're earning interest or insurance from them. And when physical gold is involved, the premiums, the logistics, the regulations, they ensure you always pay for convenience, not for purity or ownership. There's hard data behind that observation. Gold ETFs, exchange-traded funds, in the first half of 2025 saw an inflow of $38 billion, the largest semi-annual addition since early 2020. People want exposure, they want safety. But raw gold, owning bars, coins, or nuggets? That comes with responsibility, risk, and inefficiency, unless you know how to reduce those costs. Banks and financial institutions often discourage raw gold ownership because there are associated costs: storage, insurance, transport, authenticity verification. These are all less profitable for banks when you own the gold outright. If you buy paper gold or gold funds, they benefit from commissions, fees, currency spreads, derivatives trade. The more intermediaries between you and the gold, the more income flows into financial sectors, not into your hands. Also, raw gold is illiquid compared to stocks or bonds. If you want to convert raw gold quickly into cash, you often lose part of its value in buy-sell spreads or shipping. Banks and finance firms understand this intensely, and they position other assets as more liquid, more efficient, more smart. But this is partly psychological control, because you accepting their pivot away from raw gold means more control stays with them. Then there's regulation. Some banks actually block or discourage clients from buying physical gold products, especially in certain countries like China, where banks have flagged or reclassified physical gold products to reduce exposures. It's not always illegal. Often, it's just friction, extra paperwork, higher premiums, lower advice quality, incentivizing you to go with gold funds or ETFs instead. Despite all this, raw gold has something no ETF or bank account can promise: true ownership, zero counterparty risk, and resilience in wartime or financial crisis. During economic storms, currencies collapse, financial systems fail, but gold keeps value. And banks, especially ones with large reserves, know this. That's why central banks continue buying gold even when real yields rise. Because gold is not just investment, it is insurance against collapse. But raw gold doesn't offer dividends or interest. That's a fact banks trumpet loudly. They argue you're losing money by holding gold rather than stocks, bonds, or savings. They point to opportunity cost, and this works psychologically because people naturally compare growth, stocks, with non-yielding assets, gold, often neglecting gold's role as a hedge. Here's where the suspension grows. When real interest rates are high, gold tends to underperform because you could put money in bonds or savings and get yield. But when real rates fall or inflation rises, gold outpaces almost everything else. As of early 2025, global economic conditions have pushed many countries toward uncertainty. Inflation pressures, geopolitical risk, supply chain disruptions. In that environment, raw gold shines. Banks anticipate volatility. They dread gold-driven runs because liquidity becomes an issue and their control over capital is challenged. So what does all this mean for you? It means that when your bank discourages raw gold, when your advisor suggests ETFs instead, when you see fees and spreading quoted as reasons not to buy bars, you're witnessing resistance. Resistance against owning something so simple, so old, so powerful, that it doesn't rely on digital systems or bank intermediaries. Your ownership of raw gold diminishes layers of financial control. Here on EGS Pro, we believe knowing this is your power. Because once you understand why banks don't want you holding raw gold, you can decide for yourself. You can weigh the costs, compare the benefits, and see if raw gold doesn't become a part of your broader strategy. Not all gold, not all assets, but raw gold, pure, physical, under your control, may be one of the safest wealth anchors in uncertain times. The moment you decide to step outside the bank's comfort zone and hold raw gold in your hand, you'll begin to notice something. The language changes. Suddenly, advisors and brochures use words like inconvenient, outdated, risky. They say gold is for collectors or inefficient compared to modern instruments. But numbers reveal the real story, and they're far harder to ignore than the carefully chosen phrases of financial marketing. Gold is one of the most liquid commodities. Dealers operate daily, spreads often between 1% to 3% depending on purity and form. Compare that to hidden charges in financial products, currency conversions, ETF liquidation fees, brokerage costs, and the liquidity argument weakens. What the banks truly fear is that raw gold requires no middleman to release your wealth. Think about that the next time someone calls raw gold inefficient. Inefficient for who? For you or for them? Now let's examine performance. Over the last 20 years, gold has outperformed many fiat currencies by wide margins. An ounce of gold in 2005 was worth around $430. By 2025, that same ounce trades near $2,450, a gain of nearly $2,450, 470%. During the same period, the US dollar lost about 30% of its purchasing power due to inflation. Gold doesn't pay dividends, but it silently preserves value across decades, outlasting political promises and bank guarantees alike. Of course, no investment is perfect. Raw gold comes with its own shadows, verification risks, counterfeit products, theft potential. But knowledge reduces those risks. Simple measures like buying from verified dealers, testing with portable density kits, or using third-party vaults can safeguard your position. The point is, these are problems you can control, unlike the invisible games banks play with derivatives, debt, and inflation. So let's pull the lens back. Why don't banks want you buying raw gold? Because it represents independence. Because it's one of the few assets immune to manipulation once you hold it. Because it competes directly with their products. And because in times of crisis, raw gold makes you less reliant on them. This is not financial advice. It is financial awareness. It's seeing the bigger picture. It's understanding that when the bank discourages raw gold, it's less about protecting you and more about protecting themselves. So if you value independence, if you want to safeguard your purchasing power, and if you want wealth that doesn't vanish with a keystroke, raw gold belongs in your story. To keep you informed, entertained, and empowered as you explore the hidden truths of wealth, gemstones, and gold. Because knowledge is as valuable as the gold itself. Stay with us for more revelations, more strategies, and more untold stories that banks would rather you never hear.